Welcome everyone to Digital ID Verification Trends that Empower Your Customers, presented by Jeffrey Quinteri, Director of Strategic Partnerships and Alliances at Onfido.
From today's discussion, I wanted to introduce you to Onfido and share some thoughts on digital identity. We'll cover such topics as what it is, why it's important, how you should think about navigating the landscape, and what we're seeing in the marketplace. And then I will conclude with some parting thoughts and observations. With that said, let me start with a brief overview of who Onfido is for those who are not familiar with our company. So Onfido was founded in 2012, and we recently announced and celebrated our 9th anniversary and couldn't be more proud of our accomplishments. A lot has changed in our growth journey, and I wanted to touch on a few highlights. First, from a leadership perspective, Mike Tukin joined our company in November of 2020 as our CEO. Mike has an established track record of scaling global technology and software businesses, and prior to joining Onfido, he brought 2 companies public. And an IPO certainly represents a future milestone for Onfido. In terms of capital raising, we started the business with $20,000, and we've now raised over $200 million to date. And it just shows you the growth in the industry as well as our performance within the industry. And we're using that money in 3 ways. First, to further penetrate the US market. Second, to bring on new talent in all functional areas. And third, to augment our product capabilities. And then lastly, just wanted to comment on our growth metrics. We've had 5 consecutive quarters where we beat our revenue targets, and we've surpassed over $100 million in annual recurring revenues. And from an employee perspective, right now we have a little over 500 employees, and we're continued to grow on a daily basis. So what is it that Onfido does? We've set the new identity standard for digital access. At its core, our value proposition digitally proves a user's real identity using artificial intelligence to verify a government-issued ID with facial biometrics. We serve many different industries, but our primary vertical that we focus on is financial services. Our customers include traditional banks, neobanks, crypto exchanges, buy now, pay later companies, and many, many more. So with that as context, let me then shift gears and talk a little bit about digital identity. And before the rise of digital, you have to remember that our ID was a physical document, right? ID verification was carried out in a face-to-face environment and was fairly straightforward. But now we're living in a digital society that's been accelerated by the global pandemic as well as other global retail trends. And therefore, verification in a remote world is much, much more complex. You have consumers that want the experience from the tech giants like Apple and Amazon. And banks have to be careful because consumers have more choices than they ever did in the past in terms of where they receive financial services. In an era of social media, trust and reputation can be damaged in the blink of the eye, and consumers have and will vote with their feet. So this convenience has some complicating factors in that not only does convenience bring good actors into the fold, but it also brings malicious actors into the fold who operate on a 24/7 basis. And as a result, we've seen a significant increase in bank fraud attempts. On the other side, you have banks that have to balance the convenience and the security with operational efficiency. And we'll talk about the management of those 3 levers a little bit later on in the presentation. And then lastly, for companies like Onfido, it's not as easy just to plug and play our digital identity verification solution in different countries because each country has its own set of regulations. And in a lot of cases, those regulations are dynamic. So with all that said, let's talk about a common definition of digital identity. Digital identity can really be grouped into 2 attributes. The first really is your digital attributes, and the second is digital activities. Digital attribute is no more than your personally identifiable information that's available online and can be accessed in the public domain. And digital activities represent behavioral patterns such as your search history, your social media activity, as well as activity that happens within your mobile phone. So with that said, why is digital identity becoming increasingly important? Well, we've already touched on a couple of the factors that have accelerated banks' efforts to double down on what they're doing in the digital identity landscape. And those are the global pandemic, as well as big retail trends such as buy now, pay later. There's other factors that are pushing that forward as well, including the fact that workforces are still largely remote today, and at least for the foreseeable future, will probably at least be, sort of a hybrid type of work environment going forward. So more and more of the activity is moving into an online environment, which is why it's becoming increasingly important for companies to have strong digital identity proofing activities. To tie it back to payments, the global payment ecosystem is believed to be experiencing 5 years worth of growth in just 1 year, according to McKinsey. And the global digital payment market is expected to grow at an annual compounded annual growth rate of approximately 20% over the next 7 years, to $240 billion. Unfortunately, with all this activity, also comes a huge spike in online fraud, which we touched on a little bit earlier. But according to Stripe, it's estimated to cost the U.S. economy on a global basis $5 trillion in losses. And as a result, according to Accenture, banks are spending greater than $1 billion a year on identity management solutions. And a little bit later on in this presentation, we'll talk about the effectiveness of that capital deployment. But the key takeaway is that digital identity verification plays a vital role in safeguarding the entire global payments ecosystem and is no longer a preference, but a necessity. So with that, there's good news and bad news in terms of how to, or challenging things that you need to think through in terms of how to navigate the digital identity landscape. On the positive side of the equation, for banks, there's an incredible array of detection and authentication methods and a myriad of vendors to choose from. And given the fact that most banks are not security companies by definition, they can rely on the specialists in the marketplaces. And there's different signals that are available and address varying levels of friction. So for an example, there's behavioral patterns. There's a whole set of attributes around device. So device location, you can determine whether the device was infected with malware, looking at hardware and software attributes to determine the device identity. There's biometrics, both from a behavioral perspective as well as from a physical perspective. There's different capture methods, whether you're capturing document images and comparing them to biometrics, or whether you're just capturing more traditional data. There's social media analytics, which is used more for thin file customers. There's the dreaded knowledge base questions, and on and on. And I think the challenge that this brings for banks is a couple things. There's a lot of questions that banks need to be asking themselves as they think through how to navigate the landscape. The first question, which we'll touch on some solutions later, is what amount of friction is appropriate? How do bank stakeholders address the fact that they're measured against different KPIs? So we've talked about before the need to balance operational efficiency, customer growth, and security. Well, if you're the fraud manager, you could pretty much shut down, fraud, overnight and probably meet your KPIs if they're not set appropriately, because at the same time, you have a responsibility to also look at it across the business and make sure that you're not turning away, good customers, and you understand the KPIs of the organization and folks who are running customer acquisition and customer growth. How do you choose the right solution or set of solutions? How do you integrate everything once you make a choice? And how do you act with the same sense of urgency and agility that fraudsters operate with, as well as digital native companies? So we'll wrap up at the end of this presentation with some proposed ideas, but I just wanted to leave you with that for food for thought as you think about navigating the digital landscape. So I want to shift gears then and to talk about what are the key themes that Onfido is seeing in the marketplace. I think there's three key themes. The first is digital preparedness does not always equal effectiveness. I had talked a little bit before about the amount of money, according to Accenture, that banks spend on identity management solutions. Well, in combination with American Banker and Arizant Research, we recently surveyed 200 management level bankers to understand their preparedness to take advantage of the digital shift. And while 90% saw themselves very well prepared, less than half were confident on the effectiveness of their efforts. For example, less than half felt that digital identity verification was very effective at scaling with business needs. So in our view, banks really need to craft strategies that balance operational efficiency, customer growth, and security. So a case in point, and we alluded to this a little bit earlier when we talked about the KPIs, if you're going to hire someone in fraud, you need to hire individuals that are not only thinking about how to mitigate fraud, but also how to make sure that you have policies in place that are not too stringent, that it's turning away good traffic. The other thing that we think will help banks is through increased use of technology, analytics, and signals and data, that banks will be able to more quickly course correct as needed. The second theme that we're seeing is digital identity verification needs to be viewed holistically across the identity lifecycle, meaning not just thought at the time of initial onboarding and verification. And banks need to view digital identity in terms of a series of factors, whether those are linked to an individual or an entity. And the end state construction of that identity has to be contextual based on the time constraints, the use case, and the value. So what does that really mean? In simple terms, what we're seeing in the marketplace is banks are looking to partner with companies that offer an integrated identity platform that combines the frontline identity proofing with databases, with digital signals and biometrics that empower them to build smarter workflows, detect emerging fraud, and optimize performance, all with the lens to make better decisions across transactions types. The term that you'll hear a lot, I think the buzzword, if you've been doing reading within the industry, is orchestration, which is simply the automation of the workflow data management. And by 2023, Gartner predicts that 75% of organizations will partner with a single orchestration vendor, which is greater than less than 15% today. So pretty astounding figure, even if it comes close to the 75%. The challenge, though, really is stitching together an effective approach while maintaining customer experience is really difficult. And businesses are looking to orchestrate their authentication practices so that the level of friction is aligned with the risk of the transaction. The third and final theme that we're seeing, and I'd be remiss if I didn't mention it, although I think it's further down the journey and the evolution, is this concept of a portable digital identity, sometimes referred to as a federated identity or a self-sovereign identity. And there certainly are those in some circles that see this as a major opportunity in the creation of a digital identity distributed ledger technology that give individuals and companies the ability to have their own self-sovereign identity. And self-sovereign identity is simply a model for managing digital IDs in which an individual has sole ownership and control of their accounts and their data, which can be shared safely when transacting. And the idea is to have a secure, decentralized, universal ID in the age of rapid digital interactions and where identity fraud is fairly rampant. I would say it's sort of the holy grail of what we're trying, what some in the industry are trying to achieve. If you look at some of the payment companies such as MasterCard has spent some time looking at this. I think they envision a platform in which consumers have control of their identity information. It's stored locally on their devices rather than in a centralized system. And so a lot of work to be done to achieve those goals. Really what the model requires is a lot of collaboration, across the different parties. So let me now shift gears to focus on how artificial intelligence and machine learning has made what some call the impossible possible, and also build on the idea of financial inclusion, which I think is sort of at the heart of creating a more self-sovereign identity. And I think it's important to then first look at a broad overview of artificial intelligence in the banking arena. I think few would argue that AI technologies are increasingly integral to the world that we live in, and that banks need to deploy these technologies at scale to remain relevant. McKinsey estimates that AI technologies could deliver up to $1 trillion of additional value each year. Now, if you look at where banks are, they're all in kind of various stages of this journey. I think some are still in the experimentation phase as it relates to AI, and others have more successfully scaled AI technologies across the organization. And there's varying reasons for this. There's lack of a clear AI strategy at sometimes that hold back banks' efforts. But one of the big things is just the fragmentation of the data assets that exist in databases in different formats, not only within the company, but also in the fact that companies are now managing certain functions in a hybrid cloud environment. But all that being said, to compete successfully, banks need to become data first and AI first institutions. Obviously, with any revolutionary development, not that AI hasn't been around for a while, but I think the data exists more in spades to fuel these technologies. AI can be a double-edged sword, right? And so what I mean by that is it's subject to misuse, and it's really up to the ecosystem to create a more ethical foundation. And at Onfido, we strive to ensure these technologies operate fairly across the board for individuals. So with that as context, how has AI helped digital identity verification? I think for AI to work, the most important part of it is data, which now exists in spades. And with the advent of digital, you have a new set of data that's coming into the fold, and that data isn't structured data organized in neat, sort of tables and columns and rows in traditional databases, but it's unstructured in different formats. But regardless of whether the data is structured or unstructured, the point is that the fuel for these technologies now exists and can be applied towards digital identity. And really, if you think about the future of biometrics and online identity verification, it involves artificial intelligence and machine learning. And the benefits of this are obviously that it can eliminate human error, it expedites processes, and over time, as you feed the machine more data and train your models, the models become a lot smarter. So with that said, I wanted to take a little bit of a deeper dive on how banks and consumers feel about biometrics. I think with regard to biometrics, again, through some of the research we did with American Banker and Errors in Research, we saw that banks are much more enthusiastic about these methods. The survey research showed that greater than half of the professionals see facial biometrics along with a photo as an effective measurement of digital identity verification. But it's not just that banks are enthusiastic. There's also another push that's coming from the regulatory front. So whether it's the OCC or other governing bodies, there's more of a push to move away from usernames and passwords. I still think within the US market, it's going to be more of a gradual change. People have been talking about getting rid of usernames and passwords for some time, but it's going to be a gradual change, and we're probably behind other countries such as China and Japan and parts of Africa, who really rely a lot less than we do on their traditional usernames and passwords. Fortunately for banks, though, consumers do expect a certain level of friction, particularly in high value situations, because it makes them feel a lot more secure. And while there's still some in the industry that worry if we're going to achieve near universal consumer acceptance, I think that attitude is changing amongst consumers as well, as consumers become more comfortable using their mobile phones and other mobile devices. as well as just the comfort level with facial recognition. If we think back to the early days of online banking and the uptake around it, I think there was some skepticism. Consumers remained, unconvinced and unsure. And, now we fast forward to today and mostly everyone that we know probably uses online banking in some way, shape, or form. So I wanted to come back to, balancing customer experience and operational efficiency and customer growth. Again, through the survey research that we saw in parallel to initiatives to improve automation and enhance digital services, greater than half of the management bankers that we surveyed are also prioritizing investments in fraud prevention and mitigation. And balancing all these priorities can be very tricky. As I talked about before, by definition, fraud prevention processes introduce some amount of friction. But the thing is 95% of traffic is good, and you need to make sure that you're not putting in solutions that stop the 5% that hurt the 95%. So in either case, it can be a real challenge to deliver on both fronts. And we think that banks would do well to continue to educate their customers on the balance, and tapping into the data and insights will really help banks set the proper course going forward in terms of how to balance these three different levers to provide the best of both worlds for consumers. So in conclusion, I just wanted to share some parting thoughts in terms of what we're seeing. Number one is businesses are employing a number of different tactics to speed the evolutionary path of their fraud and risk controls, while also keeping a keen eye on the customer experience. As an example, many banks that we work with are trying to minimize the number of vendor solutions, right? In concept, it's always easier to do business with fewer vendors, and many businesses are looking for their solution providers that can provide, best-in-class capabilities across the layered, risk spectrum. We see the concept of one API, so that the financial institution only has to code to one API at a time, which enables businesses to evolve their fraud and authentication strategies without the need to tap into IT resources, and significantly reduce the ongoing costs associated with maintaining multiple third-party vendor relationships. We're also seeing an accelerated effort to tailor authentication and education to consumers. We think that consumers will embrace and react to authentication in different ways, and incorporating this knowledge into your customer engagement strategies is crucial to increase adoption rates. I think the third thing is ensuring the solutions work together and holistically and are not additive to one another. So while a layered approach is key to success in the digital channel fraud mitigation, the solutions must be brought together in such a way that the alerts can be evaluated in a holistic manner. If you don't do this, the multiple solutions lead to a compounding of alerts and potentially impeding the user experience and adding to the burden that it places on manual resources. So in closing, we think banks will require a much more data-led approach to deal with the increasing threat vectors caused by the digital transformation, and that a single approach is not enough to stay ahead. The battle for customer acquisition is way too intense, and banks need confidence that they're not only onboarding good customers, but that retaining these customers and creating profitability associated with the retention of these customers. So I wanted to thank you very much for your time today, and look forward to working with some of you and meeting with some of you in the near future. Thank you very much.
Thank you for joining us for today's session. If you have any questions, please do not hesitate to reach out to Jeff.